Okay, welcome back to the channel, everybody. So today we're going to go through who is the market maker and why we need to understand how he moves so that we can move alongside with him. Okay, so this is the best way that I can explain to you how the market maker operates. So when you place an order, your trade, Binance or whoever you're using as your broker or your exchange. So let's say, for example, say you're using Tradeovate. Tradeovate, when you put $100 into the market, yeah, so you've gone long or you've gone short, you've put $100 into the market, and then you make $100. It's not the exchange that pays you. The exchange do not have the funds. They'll have the funds to pay your $100, but they won't have the funds to be paying the millions of dollars that are being traded daily. So this is where the market maker comes in, and this is why it's so important that you guys understand that market makers are present inside of markets. It's not a conspiracy theory. These things do exist. They are real. It's the only way that we get liquidity inside of the markets. So when you place your order, it will go to the exchange. Once it's gone to the exchange, they will ping it off to their liquidity provider or market maker, as we're going to call it in this video. Your market maker will then accept your bid or your sell, come back to the exchange with a counter offer. So when you go long, the market maker will have to go short. Okay, that's how it works, and then the exchange will ping it back to you. So this is how the markets operate. Okay, so every time that you go long, the market maker has to counter your contract with a short. Same, for example, if you go short, the market maker will have to go long, and he'll counter your offer. So this is the best way I can try and explain it to you. If you're up, let me see if I can find a pen quickly. Brush. Say you're up $100, yeah? If you're up $100, you are taking it away from the market maker, okay? So market maker loses. So your position's up $100, you close your position, so it's closed. Market maker then has to sell your contract, give you the difference, and that's how you pocket the money, okay? So inside of markets, there's going to be tons of traps that are being set, and I didn't make the indicator. Shout out goes to Traders Reality. He's the one who taught me all of this. I spent years studying everything that he says, and then I found ICT, combined the two together, and that's how you've got the strategy that I've created. I've took bits of information from every single party that I thought had genuine knowledge, and I've come to this conclusion. So that's essentially how market makers work, and it's important that you understand the concept so that you can apply it in real time when you're inside of the markets, so you can see the traps, avoid them, and trade with the market maker. Okay, we want to be trading with this guy. Okay, he's not the bad guy. He's the one who pays us. You know what I mean? It sucks, but he's the one that pays us. That's the reason liquidity is inside the market. So, yeah. Okay, so now that we've gone through how the market makers operate and what the business model is, we're now going to take a look at the setup that has the best probability of going in your favor, because you're avoiding the traps, and you'll see what I mean by when I say that. So as you can see here, inside of macro times, you want buy side. Well, it can be prior to macro times, but the entry must be inside macro times. So buy side liquidity was swept, which means that the sell stops have been taken, which means sell stops have been hit. So anybody that was going short has now been taken out of their position. Then it will consolidate for a little while, and this is where you're going to get your manipulation. Okay, so this is the manipulations that's going to push price artificially upwards. Market maker will be enticing people to take long positions here, because the breakout traders will be taking trades above this high because it's breaking out. So they're going to be entering their positions to go long, in order for when they're going long, the market maker is going short. So only way that he makes a return on his investment is if the market comes downwards. Okay, that's important to know. Okay, so that's when you get so I look for a strong displacement after the unicorn setup. Okay, so basically when the previous buy side liquidity has been swept and then it's been tapped into one more time, we want a strong displacement below. This means that the market maker is present, he's pushing price down because tons of money is coming into the market, and then we want to catch it when he comes back into imbalances inside of the chart, and then we want to ride the move back down to opposing sell side liquidity in this example. Okay, hopefully that all made sense. If it didn't, ask questions down below and I'll make another video making it a little bit clearer. There's a lot of information to absorb, So if I might miss a few things, I do apologise, but let's continue. Okay, just a quick one, guys. I just want to give a quick shout out to the Signals room that we've been absolutely killing it inside of this group recently. So that's 7 weeks in profit, 7 weeks straight in profit. We had a little bit of issues with Telegram. They actually did close the old Telegram. So I've restarted a new one and added all the guys that had paid to come back into the group. There's a few guys that are still missing because they need to accept the invite, which I'm sure they will do in the next few days. This is a recent event. This is the trade breakdown that we had this week. Even though there was no news during this week, we still come out with 62 points, which is pretty damn good since there's no news. There was only news on Thursday, and it didn't even move the markets. It was shit. Okay, so this is the third segment of the video, and we're going to go through a trade that we took on Friday, which was yesterday, during the 2nd AM macro, and I'm going to give you guys a explanation because I had a few messages and people didn't understand why I took this trade, or when they saw the signal, I don't think they took it because they weren't confident in the trade, but I was 100% confident in this trade. That's why I executed it. The second it tapped into the fair value gap, I didn't wait for it to respect it. I just knew that it was going to bounce back, and I'm going to explain to you guys why. It's important that you understand the previous slide with the market makers and how they operate, so that this slide will make sense to you. Well, not this slide, but this trade will make sense to you. So let's run it through. So we're inside of macro time right here. Yeah, you can see that the short time low just been swept. Okay, so anybody that was going long here with their buy stops here has been taken out. Okay, so market makers made his money. Happy days. Okay, so this is where I could see that the manipulation was happening. As I explained to you before, when a buy stop or a sell stop is hit, it means that the contract is being sold or bought by the market maker, which means the volume will come into the market, tick volume. It means this is where price has exchanged hands, or contracts have exchanged hands. Money is flowing with inside of these candles. So a red vector candle will be 200% more tick volume than its average last 50 candles. Okay, so there's 200% more volume happening within these set of red candles. Okay, that's why the price is being artificially pushed down. Okay, purple means 150%. Don't worry about that right now. And then you can see here, you see the green candle that's happened right here without taking out this point of liquidity right here. You see the green candle that's come into the markets. That's 200% tick volume increase. Okay, so there's a lot of buys happening here, which means market maker has fulfilled his orders, so he is able now to go long to bring price up. He's induced shorts. He's ready to go up. Okay, because he wants to start attacking these zones because he doesn't want these people to get paid. If price keeps going down, he won't. He's losing money. Okay, so it's in his best interest to come and take these zones out. Come take these zones out, because people that are over here, they've been making money the whole way down, but they haven't closed their position. Do you know what I mean? That's just retail for you. They don't take profits. So there you go. There was your entry there. So you can see we had a nice strong displacement, continued to carry on going up. And this is where we entered, right in here. So you had a valid stop of 25 handles, but I think I put it at 15.75, and then we just targeted simply 56.75. So we put it right underneath the buy side liquidity right there. We were tapped into the FEG after a displacement. That is your displacement. I'll mark it out for you so it just makes things a little bit simpler. There's your displacement, break of structure to move upwards. Where's my fucking box? And there is your fair value gap entry. So just bear in mind what I said here. I would not have taken this trade if I didn't see this behavior from the candles prior to that, but these gave me the indication the market maker is ready to run price up. As you can see, same thing here. Red, red, red. Take out this to move price back up. You'll see it all the time. It's the same shit all the time. Move price up. Let's come all the way down here. Red candle, spike. Take out the lows, move price up. You know, so that's why I leave these on the these aren't essential. Like as you see during the streams, I do actually turn them off sometimes because they do get a bit. They do mess around with your eyes a little bit. Sometimes I do just turn them off, but yeah, that was the reason for taking that trade. And as you can see, final TP. Okay, just so we're clear that you can see. So monitoring, I was letting everybody know that I was watching price because I was seeing this movement happening. Long NQ at 24.72. 24.72. Right there. And what time was it at? Well, it's going to say 11.05 here because it's UTC -4, but that is 16.05 in UK. 16.05. Okay, so there's no fucking bullshit around here, you know. Like, there's your proof, you know. Called it to a T. Okay, so that's everything to do with that breakdown. So if you guys have any questions, make sure you leave them in the comment section below. I'm always available on Instagram. You can always message me. Of course, if the channel gets too big, I will struggle to respond to messages, and the best way would be the comment section. But as it stands right now, I can take on you guys messaging me in the Instagram. So yeah, with that all said and done, I'm out. Peace.